All right, guys, I'm about to give you the number one mistake that new and kind of intermediate traders make when starting to trade cryptocurrencies. And this is just going to be a very off the cuff kind of video. I'm not going to be editing this at all. So if you have to speed me up at 1.5 times, that's totally fine. I know that I've got that southern drawl and I can harp on for a little while. So if you got to put me on 1.5x or 2x to listen to me talk, that's totally fine. But anyways, the number one mistake that brand new traders make and people that have been trading for just a little while, especially in the cryptocurrency markets, and this does apply to both stocks and crypto, is over trading. And what I mean by that is placing a trade hoping for one singular outcome and then either exiting that trade or exiting too early, I should say, and opening up another trade immediately. And the problem with that is that you can leave so much money on the table, and you can also burn yourself and lose a lot of money by over trading. So what you want to do when trading cryptocurrencies, instead of going out and looking at what has green candles and chasing green candles, because a lot of brand new traders do that. They see what's pumping and they say immediately to themselves, hey, other people are buying this right now. I should buy this too. And that's a huge fallacy when trading any type of asset, because by the time you see a big green candle, it's already too late. The majority of the people that have bought have already done so. And so you are just going to be somebody else's exit liquidity at that point. And I previously talked about what liquidity is. So if you want to check out that video and see exactly what liquidity is, I encourage you to go and take a look at that. I'll post it in the top corner here so that you can view that. But I go a little bit more in depth as to what liquidity is in that video. Anyways, what I'm talking about here is a fallacy that a lot of brand new traders make, and that is chasing green candles, chasing green and thinking that you have the opportunity to make money in an asset that is currently pumping. But the problem, like I said, is that by the time you see that pump occur, it's already too late for the most part. Now, are there opportunities out there of things that have continuous growth that might continue going up? Yeah, absolutely. But you have to realize that even in this market where there is a ton of volatility, this still isn't a market where you can just get rich quick overnight, right? So that's the first thing that you have to understand, is that this is not a get rich quick scheme. This is something that you have to put your heart into, just like any other type of trading. You have to do the research. You are your own boss when trading cryptos or any other type of asset. You determine what you purchase and when, and you also determine when you sell. And over trading is the hugest hurdle to overcome when getting started, because sometimes you see these assets that are pumping and you decide to sell your assets that you currently have to get in on the new hype. Don't do that. Try to stay away from that as much as possible. What you need to do is you need to find assets that have potential to make a huge return because they're a good asset to hold, meaning that they have a good team, they have a good roadmap, they have a good strategy for technological advances, they have great marketing skills. All of those things are needed for a good project. And there are tons of projects out there with very low market caps that have the potential to have very large market caps. And what I mean by that is there are some projects out there that are under $100 million market cap right now that have the potential to be in the billions. And I'm not saying that that's going to happen overnight. That's what I'm trying to sway you against. That is a bad mentality to have. Don't think that these things are going to happen overnight. People that bought Bitcoin in 2010 did not make money overnight. There are a lot of people these days that say, oh, if I had known about what Bitcoin was, I would have bought it back in 2010. No, you wouldn't have. Let's be realistic. You would have thought that it was too sketchy, that it was way too far out there, and you probably wouldn't have invested. The majority of people would not have because it was brand new technology at that time. There weren't a lot of holders and nobody really knew what it was. Nobody was accepting it as a form of currency. So the majority of people would not have touched Bitcoin in 2010. But the people that did hold for all of these years have made an exponential return because at that time, Bitcoin was worth under $1, which means that, if they would have held until today or sold at the top, they would have made over a 60,000 times markup on the Bitcoin that they purchased in 2010. And so that's what I'm trying to tell you guys. That's a 13-year hold, a 12-year hold, 11-year hold. Like, that is not something that just occurred overnight. People were patient and it paid off. And that's what I'm trying to stress to you guys. Patience is going to be your biggest asset when trading cryptocurrencies. So what I encourage you to do is start researching some of these assets that are very low market cap, that have the potential to be huge market caps. And you'll know when you see them because they will stand out above the rest. Now, there are some people that are smooth talkers that will try to sway you in purchasing an asset that doesn't have any of those good qualities that I named off. They'll try to sway you and say that they have those good qualities, but underneath, it's all just mumbo jumbo. Stay away from that. And so on top of everything that I just mentioned, don't throw your life savings into these things, right? These are assets that have the potential to be huge, but they also have the potential to go to zero. So do not put your life savings in these. Put a small fraction of what you're willing to invest into these types of assets with very low market caps. I always encourage people to hold Ethereum and Bitcoin, regardless of what else you purchase in the market. I think that it's just smart to have those assets. Bitcoin is going to always be the gold standard for crypto. And so I encourage people to have that in their portfolio. It's not going to make them rich. I mean, if you were to hold it for the next 20 years, maybe, right? But that is a very long, hard struggle to do that. So overtrading, let's get back to that. Overtrading is going to be the downfall for most traders, and most traders will end up giving up after a certain period of time because they just got burned out or they lost too much money. And it's because of overtrading. So again, do not open a ton of positions all at once. Do not chase green candles. Don't go after the next hyped coin. Like Pepe right now, for instance. I've talked about this in other videos. There are already a ton of people holding that coin. And so you could easily be the exit liquidity for other people that got in early. Now, I'm not saying that that's the case. There might still be a lot of potential for Pepe to continue going up, but I'm not trying to make that argument right now. I am trying to say that it has already gone up exponentially in such a short period of time that it is a very risky asset to hold right now. So don't chase after the next big thing that everybody is talking about in that moment. You want to be looking for those gems that not a lot of people are talking about yet, but just enough to where you can figure out what type of community is being built there. You want enough people talking about it to where you could see the potential of other people getting on board with that asset. And so if you find these assets that have the potential to build a large community around them, that have the vision to build something amazing, that's what you want to invest in. And you want to hold on to it as long as possible until it reaches your hypothetical, okay, this is the time to sell. But don't go in each day, buy an asset and trade it whenever it goes down, or, you know, it just barely pumps a little bit. Like, make sure that you articulate to yourself exactly where you want to be trading these assets at. Like, I'll give you an example. Harmony One was a very large investment of mine a few years ago. I got in very early, right before staking went live on mainnet. And I told myself exactly where I wanted to be trading that token, or that coin, I should say. I told myself exactly where I wanted to be exiting, and that's what I did. I exited right when I told myself I was ready to do so. And, you know, a lot of things happened with that trade as well that I won't go into in this video, but there are going to be hiccups in the road, right? There always is. There's going to be things that get in the way of your plans, but you need to be able to manage those and set expectations for things like that. Like, you need to determine early on what your exit strategy is going to be, and don't sway from that unless there is an absolute need for it. Like, when Harmony was hacked, I'm sure a lot of people sold right then and there, because that was just one of those things that it's an anomaly, right? Like, things will come up, but try your best to build a plan and stick to that plan as much as possible. The more you're trading, the more money you're leaving on the table. Find good projects, invest in them early and often, and sell when you believe that it is reaching a near all-time high or all-time high. But plan that number. So let's say you invest in a project that is currently worth 10 cents a coin, and you want to exit at $1.50 because you believe that it will easily 15x. Make sure you plan those sells at $1.50. And if it doesn't ever reach that, and you've been sitting on it for a while, and you think that it's time to sell, then go for it. If that's what your gut is telling you, go for it. But do not sell on every little thing that comes up. And that's what I want to impart on you guys today in this video. I ran a little bit longer than I wanted to talking about this, and I kind of got caught on some tangents, but I think that this is a really good stopping point to talk about this. I'm going to continue making more videos like this where I just impart some of the wisdom that I have accrued over the years of trading cryptocurrencies, and hopefully it helps some of you out there. Hopefully it does. And if you enjoyed today's video, please be sure to hit that like button. And if you haven't already subscribed, please do so. It really helps my channel grow. But that's going to be it for this one. Thanks for watching. Crypto Clay out.